Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
Copper is going to be hot, and adding some spice is hot chili with its Costa Fuego project in Chile. Hello and welcome to Kitco Mining with me, Paul Harris, at the Rural Symposium in Boca Raton, Florida. Joining me today is Chili Easterday, Managing Director of Australia's Hot Chili. Christian, welcome to Kitco.
Hi Paul, good to see you.
Good to see you too. Christian, what is Costa Fuego and what makes it so special?
Costa Fuego is a large-scale development hub that Hot Chili has been advancing on the coastline of Chile for nearly 15 years, certainly 13 years since the company listed on the Australian Stock Exchange in 2010. But it is a collection of two very large deposits sitting at low altitude in the middle of infrastructure next to a port, straddling the Pan American Highway, that we've just recently combined to put the first economics around this large-scale hub. And I guess what's really important outside of the infrastructure advantage and low elevation is that the project now is of a critical size. It represents a top 5 by scale copper project that is coming to meet supply by the end of the decade. One of the very few that can do that, but what I guess really makes us stand out now in the economics is all of that low elevation advantage and the fact that the ore bodies can be processed with raw seawater have combined to produce the lowest capital intensity project in the global development pipeline for copper.
Okay, thank you. Now, I had the pleasure and the privilege to visit the project early this year, in January, if I recall. So I saw a lot of these aspects for myself. You're talking about the Cortadera and Productora deposits. You've unified those into one resource, renamed it Costa Fuego. What's the development plan going forward?
Look, the development plan forward from here, we have about 80% of our pre-feasibility completed, which is why the detail in the PEA was at a very higher level. So that pre-feasibility is due to be delivered next year, and hopefully between now and then we're able to take advantage of an upscale opportunity, and that is to scale this project up from around 100,000 tonnes per annum of copper production for a 16-year life with 50,000 ounces of gold production towards a 23-year mine life. And we can do that firstly by just looking at whether the large porphyry deposit in Cortadera, which has transformed this coastal copper hub towards 1 billion tonnes in the last few years, whether that can actually be developed into one single large open pit. At the moment, the economics are around primarily an open pit development at Costa Fuego, feeding a central processing facility, putting out around 400,000 tonnes of concentrate a year, grading around 26% copper with very low arsenic, and also some cathode production. But what we're looking at doing is upscaling this towards a 150,000 tonne per annum copper play, which would make it not only one of the largest projects in the development pipeline outside of a major, but it would afford the cash costs to be able to be reduced and sit within the first quartile of global cash costs for the industry, which is very important for us submitting our environmental application for mining at the end of next year with that pre-feasibility. Okay,
thank you, Christian. Now, copper development projects, you're typically looking at a minimum base case initial capital development cost of $1 billion, often multiple billions going forward there. So being near the coast gives you a lot of advantages there in terms of the amount of infrastructure you need, or rather you don't need to build. And as you mentioned, you're using seawater as the sort of processing liquid rather than, it's obviously desalinated. You don't need that capital cost. You also avoid any potential issues about drawing continental water, which in Chile is becoming increasingly complicated. Why is having a low capital intensity important for the future development of the project?
Well, it's really about risk. And the last cycle for copper was unfortunately littered with a number of projects which saw significant overruns on capital, and these very high Andean super developments, I call them, almost reset the capital intensity curve for global developments in this space. So we're sitting with average capital intensity of around $17,000 to $18,000 per annual tonne of copper equivalent produced in the world. And this project has achieved a 10,000 number, so currently the lowest capital intensity of a major copper development. And why that's important, it's about being able to build these with the correct economics that produces quick paybacks and ultimately strong returns. So firstly, having a low capital intensity or low capital hurdle, it means that for $1 billion to put out a 100,000 tonne per annum payload or 850 million US of revenue a year, it's about half the cost it would be if I was in the high Andes alongside all of our other global peers.
Okay, now you talked a little bit about the global pipeline of projects. There's not a great deal in there at the moment, is there? So presumably that would mean that you're one of the prime candidates for takeover from a bigger mining company. Is that the aim, or is this something you want to build yourself?
Look, we look at the entire value cycle of an asset from exploration right through to production, and we understand where we are on that growth trajectory. We have a market capitalization of around 180 million US at the moment, or 130 million US, 180 million Australian. We have two very important data points in the market. One being a very recent data point set by the takeover by BHP of Oz Minerals for around 9.6 billion for a company producing around 120,000 tonnes per annum of copper, around the same aspirational level that Hot Chili has with this Costa Fuego project. So that was around a $4 per pound copper price environment that Oz has been taken over. In the last cycle, the Australian market had a second data point. It was Equinox. And again, around close to an $8 billion takeover, similar production level. So we have now spent 15 years taking this project from inception on consolidation of coastal land holdings through discovery, through the addition of Cortadera and the upscaling of the resource to a PEA which demonstrates probably arguably one of the strongest set of economics of a project of this scale. So from here to a financing decision in 26 and potential production, one of the first of the 100,000 tonners to come to market this decade, that is not a long period of time to wait after building this for 15 years. It certainly sits within the average time it takes to bring a large-scale project on in the copper sector, around 20 years. But most importantly, we know that the market capitalisation of Hot Chili at $4 a pound copper will be sitting in that kind of range. But what I would say is the tremendous upside that we bring is what happens if copper, by the end of the decade, is around $8 a pound. And that's a pretty frightening equation on our share price.
Well, I mean, you probably mean attractive rather than frightening. It sounds like you're wanting to keep any potential suitors at arm's length until you've added much, much more value to that. Now, you recently got a 15 million US investment from Osisko Gold Royalties, and your stock's pretty much been on a tear ever since. So it seems like the value of that goes way beyond just the financial.
Yeah, it wasn't really about just the 15 million US, as you said, Paul. So sort of some people are very astute in what they've seen Hot Chili do, and it's a lot about what Nicky Adshead, our new chairman, has been talking about for the past year, and it's bringing the optionality that our project has to bear in terms of our financing, and therefore managing very prudently the dilution to our shareholders going forward. A lot of these big projects can be a trap and a dilution cycle all the way through to financing decision, and then another significant dilution event waiting for our shareholders then. So planning out how you're going to be able to finance something and then navigating the last of your financing requirements into project financing is extremely important. And so the Osisko transaction has allowed us to put the asset value to work rather than the market capitalisation of Hot Chili. If we had have raised that money, we would have issued about 20% of the company in dilution to our shareholders. And what this represents is 1.1% for 15 million US, with no guarantee that it'll be in production at any set date from Osisko. So a very much risk transaction from Osisko, but it values the project at 1.38 billion. And ultimately, what we see is that 15 million US cost us about 50 million of NPV post-tax, but it's the opportunity of what those funds provide. If they're able to be deployed into the 30,000 metre program, which starts in the next day or so, if they are able to achieve further optimisations in our pre-feasibility, which we deliver next year, and give us the time to put into effect this upscale strategy, then the addition of NPV that we add with this funds, is extraordinary. So it leverages the value equation twice there, but most importantly, it removes any overhang of a raising anytime in the future, and therefore providing 12 to 18 months of funding is strong. There's significant endorsement that Osisko gives in that they are one of the leading North American streaming and royalty groups. It has an amplification effect for Hot Chili, particularly following our dual listing into the North American market through the TSX-V and the OTCQX.
Okay, imagine you've got many more eyes looking at you now, because obviously Osisko Gold Royalties is a publicly traded company. It has a bunch of analysts following it, and the analysts tend to have to investigate the assets that Osisko Gold Royalties invest in as well. Now, in terms of the, as you mentioned, the Toronto listing, you renamed Cortadera and Productora as Costa Fuego, but there was also a move to rename the company, but that was knocked back at the recent AGM. What's the backstory there? What happened?
Yeah, look, we're I guess we've seen a significant changes throughout our organisation as we transform the resource book position for First Economics on this combined hub, and started moving on a number of things that we were active on, but transforming the nature of our board has also been going on over the past 18 months. Dr. Stephen Quinn has recently joined our board with significant experience in building copper mines through his president role at Capstone previously, and Nikki Adshead-Bell sort of coming onto the board, and so interacting with the North American market, we did have feedback that perhaps was that the company's name wasn't befitting the asset and the company that we were building. And so, that kind of feedback we take on board, and it was something we felt was a very easy fix. It's very easy to change the name of the company. If that's the only issues that the company seemed to be getting negative feedback on, then that was something that we thought that perhaps the shareholders should vote on. So that vote was held, and obviously for people that like the name, was a great outcome that the Hot Chili brand has remained intact, and we've had our own vote, and we've seen that occur. But certainly, I think that probably shows the maturity of the company as we step forward. We certainly, I didn't have an opinion either way on the company name. I just believe that, that a company makes the name and a name doesn't make the company.
Absolutely. Well, it seems that the Toronto market may be a little bit more woke than perhaps the Australian market. Incidentally, what did you put up an alternative name?
Yeah, Costa Copper was the name that was chosen out of a significant amount of internal process that we went through with our marketing team and stakeholders. But very pleased that we were able to use a lot of the marketing and rebranding in a lot of the new material that
you've changed the visual aspects of it. Yeah.
Correct.
Okay. Now, as we mentioned several times, Hot Chili is listed on the ASX, and you're now in quite a unique position there. As a copper developer, you're now in quite a unique position. Tell me why that is.
Yeah, I think that what Hot Chili is two things. It's one thing to the Australians, and it's another to the global space. we knew that going to Chile meant that we would be dealing with large-scale assets at a particular grade range, and deposits that represent the majority of global copper supply. They're 0.5%. They achieve very low operating costs through economy of scale, and therefore you need critical mass. So for Hot Chili, we were always treading a path that few had tread in Australia. One in particular was Equinox, the last time Australia had a developer of that scale. And we learnt a number of things from Craig as he saw a company be re-rated significantly, moving into the North American market and aligning with really the projects in his peer space. And so we're almost seeing a deja vu moment, where Hot Chili is finding itself in that Equinox moment, where we have a 1 billion tonne play on the coastline of Chile in the big space. We're the largest resource on the ASX in copper outside of BHP Billiton, and now we're the largest project in the entire market for Australia by producer class or developer class or explorer class that is holding a project capable of 100,000 tonnes of copper production. So Oz Minerals has been removed, as we've discussed earlier. Newcrest is now being taken over by Newmont, and that transaction is going through. And we find ourselves in this very weird situation where we have one of the world's leading venture capital markets for mining not having a mid-tier copper space, and Hot Chili now being the only player in that space. So, it's unique, and it might well offer a lot more attention to Hot Chili's share price, because the exposure that we represent for the Australian market to copper is the largest leverage formula that there is in the Australian market. For every 10 cents a pound that the copper price improves above $3.85 at our long-term price deck, 100 million US NPV post-tax is added to the value of this project. And put simply, if the copper price were to go up 50%, Paul, and I don't think that that's asking too much given the dynamics that are going on over the next few years, the NPV on our project without any improvement sits at around 3.3 billion US post-tax. That's around a $10 or $11 share price on Hot Chili. So we sit in a really strong position at the moment.
Well, yeah, definitely a good position to be in. But I understand you're also getting starting to get some traction in the London market as well.
Yeah, we've seen a fair bit of interest coming out of the London market, particularly in the last few months. But we've always had shareholders in London from our original listing in the Australian market, and we enjoy a very loyal base of shareholders in London. So we do get over to London once or twice a year, and we'll probably be starting to step that up along with our efforts into North America.
Will possibly be a sub-listing in London?
I think you never say never, Paul. At the moment, we're listed on 3 exchanges. That's keeping our COSEC very, very busy. But certainly, as we approach financing in 2026, we'll be looking at the appropriate capital mix that will go into what little equity we are reserving for our strategy to finance this. Most of the financing will be associated with probably investigating our export credit agency options in terms of debt financing, and then putting to work some of the other optionality we've been discussing, which is the offtake rights, which remain in the project, and the precious metal streaming rights, which we have not moved on as yet.
Okay, to get there, what are going to be some of the key highlights or milestones that you anticipate over the next 6 to 12 months?
I think the second half of this year is going to be a combination of drilling news flow coming in. And a lot of the drilling is going to be towards growth projects, and probably some of the more exciting targets will be front-ended and offer some of the earlier news flow on the drilling front. But also that de-risking and remaining pre-feasibility related drilling will be undertaken. But ultimately, 2 catalysts at the end of the year: a PEA on the large open pit option, which has the potential to take what we already have and just expand it. And secondly, a resource upgrade, which will see By that time, almost 2 years of drilling at the projects go into that. Behind the scenes, of course, still moving on a port negotiation, looking to finalise the scale of what that port handling system will be so that we can finalise that discussion with Port of Los Lozos, and also some commercial things that we're doing in the background which are always offering that X factor of alpha.
Well, it sounds like there's some exciting things to come. Christian Easterday, thank you very much for joining us today.
Great to talk to you, Paul. Thank you.
And stay tuned to Kitco Mining for more from the Rural Symposium from Boca Raton, Florida.
Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.